Okay, let's break down those movements with Zwelakhe Mnguni, who is the Chief Investment Officer at Benguela Global Fund Managers. Thank you for joining us this evening. Let's start with those overall market movements that we saw yesterday. I mentioned that the JSE ended off the day, albeit marginally, in the green. Today, over 0.5% in the red, with some impacts from the resources as well as the industrials today. What would you say were some of the other catalysts that informed movements?
Yeah, I think probably if one looks at the rand itself, the rand was actually stronger today. So many of our resources counters translate the dollar earnings back into rand. So that has an impact on our index. And you also saw that the Naspers stable was also under pressure. Again, it's a translation issue on that front. But I think if you look at the global market, and the US was slightly in the green. I think the European markets are also marginally in the green. I think it was only Shanghai and Hong Kong that were a little weak, but generally a little positive in global markets and a bit weaker in our market.
And I suppose when we consider the global market, the US, for example, everyone, or market participants rather, are watching for that inflation number that is set to be coming through there. Are there any thoughts on how that will move markets?
Look, I think the inflation number is probably going to remain elevated for quite some time. And one can highlight factors like the supply chains development in China, where the lockdowns are having an effect on factory productivities. But also you are seeing the situation in Ukraine also remaining quite tight. So Russia pulled out of the grain deal earlier this week. So again, that creates a bit of uncertainty, and that will push prices higher for the much needed commodities like grain, sunflower that is used in cooking oil, and certainly that would keep the rates elevated, because inflation, the rates are being high to try and bring inflation under control. And certainly, if inflation remains high, we would see that there would be high elevated rates going forward.
Let's get on to some company updates that came out today. Aspen announcing refinancing from a number of global lenders. Your thoughts on the company's trajectory based on the refinancing? And I don't know, some market analysts that I engaged with weren't too keen on the idea, but this is the time or the state of affairs for the company, and it's the best way forward in some instances.
Yeah, remember, Aspen had a lot of debt that they took on through the acquisitions and then the expansion of their plant. And as a result of that, they had a lot of debt that was, I would say, revolving and more short-term based. And what they did this time is they tried to get better terms on the debt, and they put together a syndicate that basically took over the debt. I think it's about 22 billion. So the concern with them was that the debt could mature and they wouldn't be able to refinance. But I think with improved financial performance more recently in the last 2 years, I think we've seen that their cash flows are a bit more reliable again. And I think the bankers were very willing to assist them this time.
And then finally, Sanral, they've signed a number of agreements with Chinese contractors for road infrastructure programs that Sanral is putting into effect. And there's been a large uproar from the local construction industry that why is it that you've left us out? Your outlook on the construction industry based on what many would call another blow to it, given the difficulties that it already faces?
Yeah, I think if you look at the overall picture, I mean, it's too early to say that it's a wholesale shift away from local companies. But I certainly think that it may create a concern, especially if one takes into account the whole talk about the BE being a stumbling block in some procurement processes. I think if this is the real shift that is happening, it might actually signal quite a big turning point, and that would be quite concerning for local companies and certainly for industry. But we hope that maybe it was a once-off situation, that the pricing was much better and quality was hopefully guaranteed, because again, sometimes you take price and then you lose out on quality.
Thank you very much for your insights, Zwelakhe Mnguni from Benguela Global Fund Managers. He's the Chief Investment Officer there joining us.